joining us and giving us your take. So that's raising estimates on numbers coming in from Ambuja Cements. But the other strong set of earnings came in from Coforge. The constant currency revenue growth of 8.1% is slightly ahead of the guidance of at least 7% growth and is the highest in the industry. Sudhir Singh, the Chief Executive Officer at Coforge, which was formerly known as NIT Tech, as we know, joins in now to talk about that. Sudhir, thanks so much for joining us. Very good set of numbers. In fact, your margins have also gone up to 17.2% versus 16% last quarter. What led to this margin upbeat, and do you think you can continue to do better margins in the second half of the year as well?
Thank you for inviting me here, and you're absolutely right. We've been very pleased with the results. It's 8.1% constant currency sequential growth, as you said. The EBITDA margins went up by 174 bips again sequentially. The order intake, and especially the order executable at $489 million, is about 21% higher than where it was year on year. The revenue performance, the margin performance is in line with the immaculate execution that the employees and the team at Coforge has been delivering over the years and over the quarters. And this is just another step in that journey.
Okay. Sudhir, good morning. You have a lot of exposure to the aviation industry, right? And I think that would have recovered quite a bit quarter on quarter. So any thoughts on whether this number from this base can now sustain?
Our exposure to the aviation industry has actually contracted very significantly. At this point in time, 51% of our revenue comes in from financial services. Only 19% comes in from the travel sector at this point in time. The important thing about our growth, that 8.1% sequential growth that has come in, is that every vertical that we operate in has grown. Insurance has grown, BFS has grown, travel has grown. Equally importantly, every geo that we operate in has grown. Americas has grown, Europe has grown, Asia Pacific has grown, and every account size-based cut has reflected growth. So the growth has been broad-based. It is not contingent on performance in the travel sector. And the firm, as I said at the outset, now is a financial services major when it comes to revenue recognized.
Sudhir, I think you said grown 8 times. Clearly
8.1%.
No. You used the word grown about 8 times in your last sentence, is all I said. Your deal wins clearly are reflecting that. Can you give us some idea of what's in the pipeline? And given this deal win, would you want to improve your guidance? I think you said mid-single digits. Would you want to make it high single digits or something else?
So we've actually done that. You're absolutely right. And you're actually absolutely right around your observation around growth being used a lot. We have been a growth story, and we've been a growth story over the last 3 years. We today, in the post-results investor call, called out the fact that we will grow at least 6% in constant currency terms in the current fiscal. And that confidence comes off the back of the order executable that is locked in, off the back of the fact that despite the pandemic, over the last 2 quarters, we have closed 5 large deals that we spoke to the investors about earlier today. And the large deal pipeline continues to be robust, and we continue to apply ourselves.
Okay, so the deal pipeline is robust. I want to talk about 2 subsegments that you're looking to scale up, healthcare and high tech. I mean, these are the 2 buzzwords, right, over the last many months. But I want to know, what is the kind of investment you're looking at, and what kind of opportunity do you see here?
We intend to continue to be specialists as we have in a very limited set of verticals. So far, all that we've done with the 11,000 plus engineers and employees that we have is focused only on financial services and only on travel. We are now going to step into healthcare. We started that journey about 6 months back. We have already signed a contract with a material provider, and we will continue to invest in healthcare and try to replicate the story that we created in financial services and travel, and start showing the same kind of growth, hopefully, over the next 12 to 18 months.
Okay. Finally, Sudhir, you have reported 17.2% EBITDA margins. You have guided for 18 to 19 in the past. When will you achieve that?
We'll achieve it this year. We achieved it last year. We will achieve it this year again. Last year, our EBITDA margins were 17.8%. This year, last quarter, I raised the margin guidance from 17.1% to 17.8% EBITDA margin pre-RSU for the year, and we will meet that number this year itself.
All right. We will leave it at that, Sudhir. Here's wishing you a great festival season and a great FY'21 as well for everyone at Coforge. So, thank you. Meherboon, well, mid-cap IT, your pick of the pack.